Thanks for the introduction, Paul. Thank you all for being here. It's great to be back at Resource Rising Stars and talking about Astute. So, who is Astute? Astute is a diversified mineral explorer. Our main project is a lithium clay discovery located in Nevada in the USA, and we only made this discovery about 6 or 7 months ago. Since then, we've drilled 13 holes into this thing. Every single one of them has intersected high-grade lithium. This drilling is over a 5 kilometre by 1.8 kilometre area, and we've done initial metallurgical test work that shows we get leachability of the lithium out of the clay of up to 98%. Just yesterday, as Paul touched on, as we put out a quite attractive JORC-compliant exploration target. And that's our interpretation of potential at the project, which is ranging between 1.1 and 1.5 billion tonnes at healthy lithium grade range. And of course, we're in Trump's America. And President Trump just recently announced an energy emergency. And that energy emergency extends to critical minerals. And so what they're doing in the US is it's gone down the chain. It's going down through the Department of the Interior, has sent a letter out to all of the bureaus and the offices. That includes the Bureau of Land Management, of Mine Rehabilitation. So these are the equivalent of the Department for the Environment and the Department for Mines here in Australia. And so this letter went out to them a week ago saying, all right, guys, you've got 3 weeks to get together and put a plan to show me how you can use everything in your power to advance critical minerals and energy projects in the United States. So they're very serious about developing a domestic supply chain. And we're in Nevada, which of course is a Tier 1 mining jurisdiction. So for all of these reasons, we think that we can get this project to be one of the top 4 lithium clay projects in the US. We have 2 other projects, a copper-gold project in the Northern Territory called Georgina. It's prospective for large copper-gold IOCG-style deposits. And the last one is a heavy mineral sands project located in southwest WA. 101 million tonnes of JORC resources. It's mostly measured and indicated. And we've got a scoping study that we put out on that one last year. $139 million MPV. Less than 2-year payback period on capital. Very attractive project. So, how are we going to create some value? Well, we're going to go hammer and tongs to advance this lithium project in the US. Our heavy mineral sands project, we're looking to take that to the next level, and whether that's by a sale or a joint venture, we're exploring those options right now, and we may have some interested parties. And we've got an experienced board. We've got 2 ex-directors of Pilbara Minerals, which is fantastic to have as a lithium explorer. Just a corporate overview. So we've got about 608 million shares on issue, market cap of just under $19 million and 2.2 million cash in the bank. Our top 20 shareholders hold about 64% of the stock, so it's pretty tightly held. And these guys are sticky. They've been continually supporting the company as we've been advancing this lithium project in a counter-cyclical way. Yeah, so to our board. So as I said, we have 2 ex-Pilbara Minerals directors. So we have Tony Leibowitz, our chairman, and John Young. Now, John was a technical director for Pilbara Minerals, and Tony was one of the founders. So Tony, when he started with Pilbara, it was about a $2.5 million market cap, and by the time he left, it was well over $1 billion. Myself, I'm a geologist. My experience is base and critical minerals. I've been doing exploration and resource development for almost 20 years in this country. And rounding out the board is Vince Fayad. Vince has over 40 years experience in corporate finance and international M&A. So it's worth considering what makes a good discovery. And we consider these 3 elements. This is the right commodity, one that's going to have strong fundamentals for demand. The right location. You want to be in a mining-friendly jurisdiction and close to your potential customers. And the third one is having the right style of deposit. So you want to have a deposit that can produce a value-added product at a low cost. Now, we heard a bit about lithium in the last talk, but the one thing I will say is if you look at all the analysts, they all have a chart just like this one, and all of them say the same thing. They say that supply will not meet demand. They might differ on the year, might be 2027, 2028, 2029, but they all say the same thing. And if you dig down onto that demand and you look at whereabouts in the world there is lots of demand, then you go to North America, you'll see a map like this. And that is that's battery manufacturing infrastructure that's been planned, commissioned, and in some cases already built. So you can see there's a huge investment in producing batteries domestically in the US and in Canada. So, and that demand is such that it's expected to grow up to 29% year on year. So that's a huge growth rate. This is Nevada, and I've got a map of all the lithium projects in Nevada. It's a great place to be for lithium. Our two projects are pointed out there in red, red mountains out to the east of the state. Nevada is one of the top mining jurisdictions in the world. And in fact, it's the US's largest mineral producer by value, once you take out coal and oil and gas. And for a tiny state, that's saying something. So they're familiar with mining. The permitting processes are transparent. It's a great place to do business. Now, if you haven't heard of lithium clays before, and we don't have them here in Australia, a really key differentiator is that you can produce a battery-grade lithium carbonate at the mine. You're not selling a concentrate that goes over to China and then gets converted. You've got a conversion cost and a profit margin. You can produce a battery product directly at the site. And what that results in is that you can do it cheaper than most hard rock operations. And on this chart here, you can see I've singled out where the lithium clay projects are on the cost curve, and I've compared it to, I've pulled out Pilgangoora as well, because Pilgangoora, which is run by Pilbara Minerals, is arguably one of the premier hard rock operation in the world. And so even in this tough pricing environment, you can see that these lithium clay projects would still have a healthy margin. As a summary of resources, I'm not going to go through this in too much detail. The top two, Lithium Americas and Ioneer, they're the most advanced projects in the state. Okay, so they've both had their approvals. And Lithium Americas is capped at just over $1 billion, and Ioneer at 411. Now with Astute, we're capped at about $19 million, and you can sort of see this is what we think we can be as we progress this project at Red Mountain. So, you've got an in-demand commodity, we've got a great jurisdiction to be, and you can produce a battery product at the mine. Sounds pretty good. It's time to talk about our project. It's called Red Mountain. It's located in Nye County, so it's in the east of Nevada. And when I put this map up last year at this exact conference, this map had some rock chip samples and some soil samples. And I said, oh, we're going to go out here and drill this thing, and we think we're going to find a big lithium deposit. Well, we fast forward, we've gone 12 months ahead now. We've got 13 holes in the ground, over 5 kilometres. Every single one of them's hit ore-grade lithium, thick intersections of it, all right, up to 80-something metres thick. And we've done metallurgical work that shows you can get the lithium out of the clay. There's more work to do, but it's a very good start. What's more is the rock chips and the surface sampling that we've done show that there's greater potential outside of the extents of our drilling. So further to the north, further to the west, further to the south, it's open and prospective. Now, potential. So this is what's next, right? We put out this announcement yesterday. This is our exploration target for Red Mountain. And the total for the project, 1.1 to 1.5 billion tonnes with a B. That's 785 to 1,300 parts per million lithium. This is a big project with big potential. And to give you an idea, I've put the range of potential contained LCE in there. And so 4.7 to 10.7. And if you want to compare that, it's hard to compare hard rock and soft rock deposits like this. But if you take Liontown, for example, at Kathleen Valley, they've got 5.1 million tonnes of LCE. And if you take Patriot Battery Metals, they've got about 4.9. So that gives you some sort of sense of comparison of contained lithium. Now, we aren't going to go and hit this thing all at once. We're going to target the, on the right of that map there's an area, 2 areas in pink, that's called Target A. And that's what we're going to focus on initially. We'll be out there drilling in about 2 months and look to do some more drilling later on this year. So the plan for delivering value is we go drilling, we'll come back, we'll look at our results, we go drilling again, and then we put out a mineral resource. I'll touch on our other 2 projects briefly. Copper Gold project in the Northern Territory, and it's in a new region. Geoscience Australia said it was highly prospective for copper gold mineralisation. We've drilled a couple of holes. We're waiting on the results for one before we determine our next steps. But one of the previous holes we drilled intersected some good grades, up to 0.24% U3O8 and up to 0.22% copper. So for a new region, you know, exceptionally encouraging results. And there's our heavy mineral sands project called Governor Broome. So almost 100, just under 100 million tonnes of measured and indicated JORC resources. We've done a scoping study, $139 million NPV, for 54% IRR. It's a $91 million capex with a 1.5 year payback. So that's pretty attractive. These mineral sands projects can print a lot of cash. Now, the next step for this thing is it really needs to be permitted and go into production. That's not our expertise. So we're looking at options, the ways to take this forward, whether that be for a sale or a joint venture. And that process is active. We're pursuing that right now. So let's take a step back for a second. Why would you invest in Astute Metals? There's 3 reasons. The right strategy, the right team, and the right time. So we've clearly discovered a lithium project with some serious scale. And in terms of the grades, it compares very well against other projects in the state. We've got the right team. We've got 2 people on our board that are ex-Pilbara. We've got all that lithium expertise, and we're going to leverage that. And it's the right time. So we've seen that lithium supply is not going to keep up with demand. So we're going to advance this project in an ascendant lithium market. And what's more, we're going to do it in a presidentially declared national energy emergency that extends to critical minerals. So you can expect that permitting, timeframes and things like that are going to be improving over the coming years. Well, that's all I have to say. Look, thank you very much for your time. I'd love to talk to you more about it. I'm going to be outside having a drink, so come and say hello.